Hey everyone, and welcome to my daily report market videos on Thursday 20th of June with me, Richard, market analyst at Hantec. And there's been a significant reaction to the Fed meeting last night. We've been discussing the importance of this Fed meeting for a while, and markets have been positioning in interesting fashion, and it's come as that the Fed has turned more dovish and pretty much met dovish expectations, but the market has taken that and run with it. The Fed cut the expectations for 2020 Fed funds rate by 50 basis points, so effectively pricing in 2 rate cuts next year. No rate cuts yet forecast for this year, but the balance of the committee are sort of bordering on flipping towards a rate cut if this situation continues, whereby Powell spent most of his conference speech talking about how the data was deteriorating, how there's an impact on inflation that could potentially be, well, previously they thought it was transitory. Well, it seems that the pickup in inflation is going to take longer than they'd expected, so they're sort of bordering on rate cuts this year as well. But certainly it looks as though the Fed is effectively firing the starting gun on this rate cutting cycle, just not pulling the trigger quite yet in an official manner. And there's been a significant move. The dollar has come under significant pressure. Sterling dollar pulling well above 127 figure today. We've got euro dollar back above 12.65. Those are key levels. You've got dollar yen moving below 108 figure. It had been below 107.80, so a close below 107.80 is a key move there. Look at this gold breakout, 13.79 on gold. Really huge move to the upside on gold through a whole batch of key resistance, and I'll talk about all the chart implications of these moves in a bit. But you've also seen equity markets pulling higher again today, and just general risk on sentiment coming through the markets. Now, what we also have is moves on oil. The oil price has had a jump today. That's comes as there's continued seeming escalation of the tensions surrounding the US and Iran. Apparently the US had a drone shot down in Iran, so this is a real escalation of that move, and 2.7% higher on the oil price today. That's a breakout, a near-term breakout on the WTI above 54.85. That signals a turnaround there, but it just adds to this whole element of commodities which are rising, and that's helping the equity markets broadly as well. So we've got general risk on as the Fed turns dovish and the dollar under pressure. So what about other data points we're looking at? Well, we've just had the UK retail sales. They came in a shade underneath expectations, and that's come today at 2.2% on the ex-fuel retail sales for the year on year. A shade under expectations, but the market is focusing on the Fed really quite significantly. At the US data this afternoon comes at 1:30, pretty much in a big batch. You've got the current account deficit, which is expected to improve slightly to 125 billion, and then later on, well, I say later, let's just scroll down, because you've then got the jobless claims 220, and the Philly Fed. Now this is interesting, because the Jerome Powell was talking about how the US surveys, federal surveys were deteriorating, and the soft data was deteriorating. So this is interesting. So Philly Fed business outlook expected to come back to 11. If that comes in under expectations again, that just adds to the whole air of dovishness from the Fed this afternoon at 1:30. That is to watch out for that. Now, okay, my chart of the day is Euro Sterling. Now, Euro Sterling has had a big run higher in the last few weeks, but that seems to now be turning a corner. Is sterling starting to strengthen once again? We had inflation which held up fairly well actually for the UK yesterday. As we know, inflation expectations for the Eurozone are plummeting. So it really is starting to turn a bit of a corner, and you can see that through the technicals, where we've seen 2 strong bear candles in a row. We've seen the momentum indicators below 60 on the RSI. That is seemingly a turnaround. You've got MACD lines gaining traction after a crossover sell signal. You've got the same coming through the stochastics as well. So this looks like the market has once again taken a move back towards a pivot level, a key pivot level, 89.40, key pivot through October, November, December, up to that pivot, turning round, and it's now on the retreat back towards the next pivot, 88.40. How it reacts around that pivot, I think, will be key, because that pivot was paid a fair amount of consideration through May. Initial resistance, and then once breaking through the resistance became supportive. So the reaction around that pivot, 88.40, will be important, I think, on a near-term basis. Closing below that, you then start to think about further moves to the next pivot, 86.90, but in the meantime you would have the 87.80 support at that level. So I wish you good luck in your trading today, and I will speak to you later.